This is Fintech Insider News. This week, Brex has partnered with ChatGPT, Lloyds wants to become the UK's biggest fintech, and after 4 years, Revolut has secured its full UK banking license. We'll be tackling all of this and more on today's news show.
Your planet is now marked for death.
Marvel Studios' The Fantastic Four: First Steps is now streaming on Disney+.
We will protect you.
As a family.
Light him up, Johnny!
Marvel's first family is certified fresh on Rotten Tomatoes.
That is fantastic.
And critics say it's one of the best superhero movies of all time.
Oh!
Marvel Studios' The Fantastic Four: First Steps, now streaming on Disney+. Rated PG-13.
What time is it, Ben? It's clobber time!
Hello and welcome to episode 1046 of Fintech Insider News. Brought to you by 11FS, the 5-time consultancy of the year that works with financial providers, big and small, to build the next generation of financial services. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. As ever, I'm joined by a brilliant panel of guests to help me break down the biggest fintech and financial services stories of the past week. So first up, we have a warm welcome back to the pod for Dave Morris, CEO of FoundryOS. Welcome back to the show, Dave. Can you remind our listeners a little bit about what FoundryOS is, please?
Yeah, of course. Great to be back, Benjamin. FoundryOS is a fintech platform for building solutions for banks and wealth managers. Exciting times for us. We've just gone live with our first customer 2 weeks ago, and about a month away from going live with our second customer. So getting out of that sort of early startup stage into actually having revenue, which is good times.
Exciting. Congratulations. Yes, revenue is always good. Now, we also have a welcome back to the podcast for Veronica Glab, Strategic Partnerships Lead at Juice. It's always great to have you on the show, Veronica. Can you tell our listeners a little bit about Juice?
Yeah, so Juice is an SME lender providing working capital to UK small businesses. And I've been leading the strategic partnerships with the team there. And honestly, Benjamin, it's nice to be back on the show once again, and just looking forward to spring now that it seems like the year of the fire horses finally started.
Amazing. Yes, the weather's gradually getting better. Britain is finally warming up a tiny bit. Mind you, it's pretty windy today. And completing a hat trick of returning guests, we're also delighted to welcome back Art Levy, Chief Business Officer at Brex. Thank you so much for coming on the show. It's obviously been an exciting time for Brex in the past few months, but can you tell listeners who don't know about Brex just a little bit about what Brex is and all the great stuff that you do?
Yeah, absolutely. Well, first of all, excited to be back. And yeah, it's amazing that all three of us are regulars on the show. Brex is the intelligence finance platform for the world's leading companies. We offer a suite of services for the financial back office, including corporate card, spend management software, bank account, and bill pay. The business was recently merged with Capital One. And so we're very excited about the scope of resources and scale that the combined business will now have.
Indeed, that was an exciting story only a few weeks ago. All right, well, we've got a panel, so let's get started. Welcome to you all. Our first story this week is a relatively big one, which is that Revolut has secured its full UK banking license. As anybody who's a Revolut customer in the UK will already know from a notification they probably got in their app as soon as the news broke, after a 4-year wait with regulators, Revolut has finally landed its UK banking license. It was granted initial approval last summer, but has since been in what's known as the mobilization phase, where firms build out the infrastructure required to operate as a fully regulated bank. With final sign-off from the Prudential Regulation Authority, Revolut can start lending in the UK, enabling it to operate as a bank in its home market for the first time. The move comes at an interesting time for the company, which was recently valued at around $75 billion and has just launched a fresh attempt to secure an American banking license. Veronica, maybe I'll come to you first. What does this actually unlock for Revolut? I mean, there'll be some people who think, well, wasn't it a bank already? And of course it was in Lithuania and elsewhere. What does becoming a bank in the UK mean for a former fintech, now bank like Revolut?
Yeah, I actually think you phrased it really well. Former fintech to bank. And it really is a lot to do with the cachet of the UK banking license. So, partially, the UK banking license will obviously allow Revolut to provide a number of services that level of regulation will be able to extend them. And that's both to consumers and to small businesses in the UK. But there is something about the UK banking license because it is such a highly regulated environment, such a mature financial services ecosystem, and it has been for centuries, that this will essentially, in many ways, it will allow Revolut to leapfrog all the way to the final boss, which would probably be Jamie Dimon, right? And go head to head with the US financial system. There is part of the a UK banking license that will perhaps enhance Revolut's ability to get a US banking license for sure, potentially leapfrog towards an IPO whenever they are strategically ready to pull that trigger. But it'll be really interesting to see how the rest of the UK ecosystem reacts as well.
Art, do you think the American regulators will give two hoots that Revolut now has a license in the UK? Do you think that would help Revolut in trying to get an American banking license, or do you think the American regulators really wouldn't take that into account very much?
So I think that from a brand credibility point of view, and Veronica kind of nailed it here, this definitely helps. I was reading a report from Brand Finance that Revolut is one of the fastest growing brands in the global 500. And so from brand cachet, it certainly helps, and it starts to have Revolut be spoken about in the same breath as the world's largest banks, companies like a JP Morgan or a Citibank. The regulatories won't care, but I think that, as we know, it's been very hard for European or UK fintechs to be successful in the US and vice versa. But we're talking about Revolut now. And so I think that this is more of a brand play as well that establishes more credibility ahead of what I'm sure will be a massive US launch plan. And so that's the way I think I'm thinking about it from the outside looking in, rather than it necessarily being easier for them to convince US regulators.
Thank you. Dave, 4 years seems like a bit of an age in fintech, where the whole point of fintech is kind of faster as well as cheaper and better. So take 4 years. Does that reflect badly on the UK's regulators? Does it reflect badly on Revolut? Or is it just this takes time, if you want to be regulated as a bank, if you want to lend money to people, you just need to go through the processes of making sure you've got all your, your know your customer, your anti-money laundering, and everything else is all sorted out.
Yeah, it does take time. Not 4 years normally. Obviously there was a lot of flags early on about some of the accounting practices and other things that have been flagged by some of the European regulators that I think slowed it down. But it shouldn't have taken as long as it did. There was all of the pressure and the fight between the Bank of England and the Chancellor about political pressure on this earlier last year and things. But the UK banking world, there aren't new banks spinning up all the time. It's a slow process, and if you hit that bar, then it means a lot. It probably doesn't impact the US regulators thinking, but there are a lot of other regulators in the Middle East and other things who will take massive credibility on there being a UK banking license to help them accelerate process there. I've worked with other startups who were looking to launch things in parts of the Middle East, and their view was to get a UK license and actually it'll accelerate and open the doors to things to us in other regions and things. So I think it's low, but it's got to where it needs to be at the end of it. And so I don't think they'll care about the length of time it took, because to most of their customers, they won't actually make a difference to them previously, but now they can really start that massive upsell exercise they're going to go through of bringing new products to everyone who's on their books. If you put it in context and ignore the 4 years, 10 years ago, they were just that little foreign exchange travel card that they were. And now they're, 13 million customers in the UK? Would I be worried as Barclays, Lloyds, HSBC, etc. Yes, they've been coming for their lunch up to now. They're coming for their breakfast and dinner as well. I'd probably be more worried as Starling and Monzo and people like that, because they're on the same numbers of customers there in those guys. And Monzo are 14 million and Revolut 13. That's where the battleground is going to be more. I don't think it's they've been chipping away at the big boys for a long time, and they'll keep chipping away at them. But the smaller sort of startup challenger banks of Starling and Monzo and that I think I'd be more worried if I was in the C-suite there.
I think that the 4 years is actually a moat for Revolut in the sense of, Nicholas is building a generational company. It hasn't stopped their growth to not be a UK bank, right? Like the growth has been insane. And so this is him saying, we're doing a bunch of things at once. I'm growing. Now I have this license and now I can execute and all of the things that it brings. And by the way, when I didn't have it, I was still growing so quickly. And so I think it's not as though in an age of AI, regulators aren't going to do their work. And so anyone else who wants the UK license will also probably have to wait 4 years, or I don't know how in process the other neobanks are, but I imagine that Revolut ran a pretty efficient process to try to get that license. They're very buttoned up as a company. So I actually see it as a bit of a moat, the time that it took.
Definitely. Veronica, we talked a bit about regulators, we talked a bit about competitors. What about customers? Do you think customers will care? And then do you think they'll start seeing different things from Revolut? Do you think Revolut will start rolling out new products?
Yeah, I certainly think it's going to help with customer acquisition. Financially savvy and financially literate customers will certainly be paying attention before they park any sort of meaningful assets or savings into a Revolut account. Because that backing means that your savings will be protected up to 250K in the UK, right? But if you're also using some of Revolut's other products, including basic asset and wealth management, or looking at a mortgage, or getting through that 4-click pathway into creating a business account, I do think that will help with user acquisition. What I think is particularly interesting is when you also look at the statistics for the average lifespan of a neobank account versus a brick and mortar bank account. The brick and mortar bank account average lifespan is still around 17 years. So it's not that neobanks like Revolut are necessarily replacing the incumbent bank's accounts, but what they are doing is capturing audiences at ever earlier ages. So you see this with child bank accounts, the under 18 bank accounts, and especially when a lot of these neobanks, again, Revolut very much included, have been savvy in their branding and their advertising through social media and other platforms that Gen Z and younger are using. They're capturing that audience that will probably are getting into the financial system for the first time at age, let's say 18, possibly even younger. These generations are likely to live until they're in their mid-80s. And in that time, they'll be starting businesses. They'll be opening up different types of accounts and getting into a more and more complex system. So it's the early audience capture that I think will be really interesting to watch over the period of the next few years.
Because that whole generation has grown up with Revolut and Monzo and Starling and others, and they'll think of them as much as they think of a Lloyds or a Barclays or a Santander.
I think it'd be interesting to see, as they bring things like lending products in, what that will do to the valuation. That brings a lot more value of what's on their book and things like that, with longer term products like mortgages and things where you've got much deeper engagement for longer periods of time with your customers and things like that. And so, the valuation is already crazy. I can see it doing nothing but going up more as they start to be able to do richer banking than just the lower level of spend.
Absolutely agree. Even just anecdotally, as soon as Revolut had announced mortgages in France and Spain, I had friends who live in both of those countries who are also of my generation. And they were saying, I can't wait until Revolut, launches that, because they're actually looking at that mortgage product as something more competitive to what the institutional banks already offer. So anecdotally, I can already testify to that. And that awareness across users is very much waiting for the next product.
We can certainly expect the digital experience to be sort of smoother than many of the sort of traditional banks have managed, can't we? So we can expect better experiences. We will, I think, you're right, see people adopting it. To me, I think it's the diversification it's going to give their business model. I mean, they already have a lot of fee revenue, but this now gives them the opportunity for net interest margin. And so I don't know whether that will drive the valuation up, Dave, or whether it just justifies the valuation that's already there, but that's an investment question. And this is not a podcast about investment advice. But yeah. Super interesting. Okay, let's move on then to our next story. So we've covered a fintech becoming a bank, and now we're going to talk about the opposite, which is that Lloyds Banking Group is striving to be the UK's biggest fintech by selling more customer data. So according to a report in the Financial Times, Lloyds Banking Group has unveiled a plan to become what it calls the UK's biggest fintech. According to the report, the bank wants to cut its technology costs by 35% by 2028 as part of a program called Technology Strategy 3.0. That includes shutting down 15 data centers, scrapping more than 800 internal applications, moving further into the cloud, and automating governance and compliance checks. The bigger ambition here seems to be repositioning the bank as a data and technology company, with more of its workforce moving into tech and analytics roles. Art, let's bring you in on this one. Lloyds wants to become the UK's biggest fintech. Hasn't that ship just sailed with Revolut?
Yes. You took the words out of my mouth. I think, anytime you have to announce that you're a fintech, you're obviously not a fintech. And I think that the way that they're going about this from, again, the little that is public is about reducing costs and selling data, which I don't necessarily see as like the North Star of fintech. Now, that being said, I think customer data is a clear moat, and it's very important to building delightful customer experiences. But the entire positioning of this move is quite off, in my view. Like scrapping apps and closing data centers, that sounds like a profitability push, sounds like a message to investors. That's not a growth story. That's not a retain talent, attract talent story. In fact, I was reminded when I read this of kind of some of the other changes large companies are making right now of founders coming back. So you saw at Workday, it's not a fintech, but it's fintech adjacent. You had the founder come back, Anil, because in these AI times, at least that company felt they might have a train moving, but it's moving a bit in the wrong direction. And they want founder energy to, in an AI world, go to blank slate and say, hey, here is what our product roadmap is. That's the messaging and positioning that I think Lloyd should have gone with, something along that, versus what they're saying they're doing to be the UK fintech. So I read this and kind of just brushed it aside as they're not going to be successful in that.
What did you think, Dave? Do you think is Lloyd's kind of perhaps doing the right things here, but just come up with a bit of a daft storyline for it, or do you actually agree with Art that actually they're probably going in the wrong direction here by shutting things down?
I think they're totally missing the point. To become a fintech is not where you start with your technology. You actually start with your organizational architecture. The way they're structured is just not going to work as a fintech. They're built around product lines in the vertical way that all traditional banks are built, and that's not how you build a fintech. Looking at cutting out technology roles and getting rid of certain apps and things like that isn't about completely restructuring from the ground up the way your organization works. Is what they have to be as if they really want to be a fintech. But there's no way they could ever do that. It's too ingrained into the history of how they work as an organization, how they incentivize their staff, how they operate as an organization. They're doing a great job of sharing customer data, especially today, sharing customer data with each other around their customers that they managed to do this morning. But we won't mention that. That's a different story.
You just did.
I don't know. It feels like a marketing exercise, and it's not a reality. This is a dressed up cost cutting exercise to me.
Yeah, message for shareholders, perhaps. Veronica, what do you think customers will make of Lloyds talking about sort of selling customer insights to third parties, anonymized or not. Do you think that is a big opportunity? Do you think customers will be pleased to hear that? What do you reckon?
I think at this point, customers are generally quite savvy and they're not going to respond particularly well to knowing that their data is being sold, whether anonymous or not. At this point, where we've been in the tech ecosystem for the last 10 years, even just take back the last, let's say, 2 or 3 years with major cybersecurity breaches of multinational corporations, with, the conversation happening in AI and, learning from customer behavior and interactions with it. I think there's generally a level of first savvy but then also hyper awareness of what tech companies, financial services companies are doing with customer data. And I think you can go as far as to say there's paranoia, right? Personally, I don't like the idea. You can, as much as you promise as a company that customer data is going to be anonymized, how do you guarantee that? What about when third parties come in? Are there really any guarantees? I don't think there are any guarantees. So it's a bold announcement to say that right out the gate. I'm not sure customers will react very positively, especially the more financially savvy that they are.
What do you think, Art? Is there mileage and value in customer data? I mean, obviously, customer data can be fascinating. There's all sorts of things you can learn and so on. But anonymized data only gets you so far. Is that valuable for training models? I mean, what kinds of firms do you think would be keen to buy anonymized data from Lloyds?
Yeah, so I think the mistake Lloyds is making here is anonymized data is absolutely helpful for your own customers. And so they should be using that data and looking inwards and saying, 57% of the customers are using bill pay in this way and had this problem, so we're going to fix that. 72% of customers are using Cursor. Are you 28% that doesn't use AI tools? You should do this. Like Brex does this with our anonymized customer data, where we put out a Brex benchmark of the tools customers are using. How big are their marketing teams? What are some of the things you should be doing to run a better business? That's the positioning here of anonymized customer data. It's not taking that data and going to Citadel and Millennium and saying, hello, like here's the number of people who ate at this pizza chain or this Chipotle. And again, like it goes back to my view here that the entire lens here is not customer first. That's the thing. To be a fintech, you need to be positioning, I would say, all the changes to be customer first. And we talked about Revolut, like we're all talking about their brand and this and that, like how it's going to help customers. That's because they're good at the way they show up in market. This felt like a push to shareholders, not customers, and investors about cost cutting. And no, look at us, we're doing AI as well. And I guess like, yes, there's a good way to use anonymized data, but I agree with Veronica. Lloyds is not going to be doing that. They're not going to be doing it in the right way.
Art, I totally agree with what you say as well. If that data was being used internally, when we talk about legacy banks, and I've said this on other podcasts before, we're looking at Lloyds, which was founded in the mid-1700s. If you want to go to even some of these older institutions like Coutts, which is many more hundreds of years old, a bank like that, leveraging historic data through an LLM intelligently to better inform its own customers and provide smarter financial services. I mean, we're talking about banks that have led their customers through the bubonic plague. How exciting would that be to say, well, we've got these unique data points that, should there be another pandemic, this is how we can provide better financial services or insure you better, in the case of, whatever apocalyptic event that could happen in the world. That would be clever. And that is the advantage that banks have. The institutions don't have necessarily more customers than the neobanks, but they have hundreds of years of historic data. But that's also not what's happening here with Lloyds. And I think that's a shame, really.
So what Lloyds has missed here really is that being a fintech is not about what you say, it's about what you do. It's about the culture, the organization structure, what you focus on, particularly focusing on how do we create value for customers. And it's not about the messaging that you put out in your marketing and out to your shareholders. So I think we're all just enormously skeptical that Lloyds is going to become the UK's biggest fintech, at least at least from this starting point. I mean, who knows? Maybe they'll turn it all around in a couple of years. But at this starting point is not. This is not where it started, is it? Okay. Well, on that note, we will take a quick pause here, and we will be back very shortly.
Hey folks, if you're anything like us, you're on the road constantly. Airports, hotels, conference centres, half the time the Wi-Fi feels as safe as shouting, "My PIN is 1234" across the departures lounge. That's where NordVPN comes in. One click or no clicks with AutoConnect. And suddenly, every sketchy airport network becomes a whole lot safer. You still get blazing fast speeds and 8,700 servers in 129 countries, so you can switch your virtual location while you're waiting for yet another delayed flight. One account covers 10 devices, and you get Threat Protection Pro to block malicious links and ads, plus Dark Web Monitor if your details show up where they shouldn't. We've teamed up with them to offer Fintech Insider fans an exclusive deal. Head to nordvpn.com/fintechinsider to get a huge discount and 4 extra months on top, completely risk-free with their 30-day money-back guarantee. Links in the description.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Now, a quick break from the headlines to tell you about our latest Insights show. Ross Gallagher is joined by David Breer, Chief Executive of 11FS, Richard Davies, Chief Executive of Allica Bank, and Sophie Guibault of Building Alpha for a fascinating discussion on how the competitive landscape in banking is evolving. So just head to the podcast below this one in your feed to listen to it. So back to the news. Our next story is that Brex is integrating with ChatGPT for expense data access. Brex has launched a new integration with ChatGPT, enabling its customers to query corporate expense data using natural language directly inside the ChatGPT interface. The integration is available through the ChatGPT app marketplace for enterprise users and makes Brex one of the first financial applications to appear inside OpenAI's ecosystem. Customers can ask questions such as which expenses are missing receipts, what their card limits are, or search for transactions by merchant, amount, or date without opening the Brex platform itself. The current version is read-only, meaning customers can retrieve information through ChatGPT but still need to return to Brex to approve expenses or take other actions. So, obviously, you're the perfect person to ask, and we'd love to start with you. So, congratulations, it's super exciting. What can you tell our listeners about this?
Yeah, so look, you did a great job of explaining exactly what it is. I think the why here is very simple. It's removing friction for users who want answers fast. We understand the data about, the DAUs and MAUs of ChatGPT. It's an amazing product. We want to make sure that when users are inside of it, living inside of there, they also have access to their Brex data if and when they need it. And I think the important thing here is this is only the beginning. This is read-only, as you mentioned, but we're working on expanding functionality as part of this broader vision, which for us is intelligent finance, a financial platform where software doesn't just record decisions, but actively helps you make them and is also alongside you wherever you are, right? We know our users are going to be logged into ChatGPT more than they are in Brex.com. So instead of trying to change that behavior, we want to adapt and allow the answers that they need to be there when they need them. I think specifically finance is a very untapped opportunity for AI adoption. And for us, this is us associating ourselves with, one of the, call it 2 leaders in the LLM space, and then also doing something that's useful to users as a first step to kind of record and see behavior. And then if it's being used more widely or adoption is very high, then we will continue to improve the functionality.
One of the really interesting things you said there, and one of the really interesting decisions you've taken, is about meeting the customers where they are and saying, well, we want to make this available on ChatGPT and on Claude. Because a lot of companies would have looked at the same opportunity and said, yeah, of course we want to embrace AI, but we want customers using AI on our platforms. How difficult was that decision to say, no, we're going to go and meet them where they are on ChatGPT? Did you have resistance internally that you can tell everyone about on a podcast? But how difficult was that decision for you?
Yeah, so I think the way to think about it is as a company that's built our product very deeply. So as a refresher, Brex built our own issuer processor. It's a 9-year-old company. We've really deeply embedded ourselves into the global financial system with bank partners and a direct integration with MasterCard. We believe our product, therefore, is the moat for our product is extremely high. We don't actually think OpenAI is going to try to build a global spend management and corporate card company for the world. Right, some of the world's largest companies use Brex: Anthropic, Toast, Patagonia, DoorDash, Coinbase. So, actually, the decision to allow some of our products to drip into other systems is actually a decision we've been proactive about, and you've seen this in our partnership strategy, where our card is actually embedded in some travel and procurement software companies. And so here, we're realistic about, hey, there is a financial controller that spends tens of hours a year inside of Brex. And for everyone else, they're using the card, they're using the app, but it's more of a hygiene function where they want it to work. And if it does, they're happy, they're satisfied. But if it doesn't, they're really annoyed. And checking your balance or understanding why your budget, like how much my budget is for this, or can I book this first class flight, that's a behavior that we believe makes sense inside of ChatGPT. Like paying for things from a ChatGPT user interface, we actually haven't seen our customers want to pay their business expenses through ChatGPT, for example. But if we start seeing that, we would probably build that, but that might be like closer to the line of like, okay, what do we want to own versus what we're comfortable having others own?
Thank you. Veronica, what do you make of this news? It's pretty exciting. What do you think?
Look, I think from a UX perspective, particularly for first-time founders, great tool to enhance their financial literacy as they're managing their P&L. I think for wider teams, it's also super useful because imagine being in a board meeting and you've got to report in on your numbers. And if you don't have it, you're missing one stat and you're about to talk to your investors. You just pull up your mobile phone, you say, hey, ChatGPT, remind me of like XYZ. That's amazing. That it's such a time saver. I just think it makes for such a smoother journey, particularly in really crucial meetings and reporting. But then when you look at also like the wider competitive landscape, I think it's really interesting to see it against some of these new AI CFO softwares that are coming out, spend management and small business finance tools. So I think it begs the question that if Brex can do this, why isn't everyone else moving just as fast to plug and play their finance workflows into the same kind of interface? So I don't know if you want to comment on that. Are you looking the competition on that?
Yes, appreciate the vote of confidence. I think, yeah, it was very clear to me that we wanted to be in the first batch of the ChatGPT apps. You look at the App Store in the early years of, the 2000 early aughts, you want to be there first because when there is a generational shift in behavior, you got to meet the customer where they are, right? And so I think that we are being innovative here in the way that other fintechs will inevitably copy us in the sense of like, this is what fintech should be doing, right? We are showing up where our customers want to be in the most tech-forward platform, but we're not giving away everything. We are allowing them to query and soon write information there. But again, that's not the same thing as saying, okay, ChatGPT is now your global spend solution, DoorDash. Brex is sunsetting its entire product, right? There's just so many use cases. And what we're saying is there's a bunch of use cases that make sense inside of other platform. Let's do that. And by the way, that platform is the largest private company on earth.
This isn't your first partnership with other platforms, though, is it? Because you already partner with firms like sort of Slack and Uber and all sorts of other firms. So
yeah, good call.
You're really quite open-minded about enabling your customers wherever they are to access Brex through other platforms.
Absolutely. That's a really great point in the sense of, inside of Slack, you can query and write similarly. And wasn't necessarily as big news. I think because there's some people who are so concerned about AI and the LLMs that it becomes like, oh, wow, interesting move that some people are partnering, others are choosing not to. But for us, it's about productivity software. And, ChatGPT for Enterprise is a productivity software. You can call it AI, I call it software. And we want to be able to have our data inside of that to make our customers' lives easier.
Dave, what do you make of this shift?
I think it's a smart approach. You see so many people who are embedding AI interfaces into their solutions, and you're behind the curve every time that you do anything because it's running ahead of you and you're trying to just keep up in that. By actually going into the AI platform as an app in there, I think it's a much smarter move. It keeps you at the front of where those platforms are going through your integration. So I think it is I think as Art has said, it's a productivity move for people to be able to just leverage things in there. You'll be working with other data sets. You can integrate across those data sets as you're talking in those queries and the way that you're working with the models. So you can be very smart. I don't think you still need the depth behind it that you've got as a platform. You can't just then someone come along and compete against you because you're just in that world of AI now. I think the interesting challenge for me will be at some point there's going to be a bit of a bloodbath across the platforms there because, at some point there's going to be some, who's going to win out? Anthropic versus OpenAI versus Google, et cetera, and at some point something's going to happen there. So you're probably going to have to hedge your bets on be at least on a couple of those. I'm assuming your route is to start on one and get onto the marketplaces of others.
That's right. And yes, I think that you're accurate in that. Like in our partnership strategy as a whole, we want to really work with the winning companies in every sector or industry. I like to tell the team we're a bit of Brex's venture capital team, where we are the ones placing bets because these partnerships take time, right? The ChatGPT Brex app took, call it a few months to build and get correct. So similarly in our partnerships with travel platforms or ERPs or procurement platforms or productivity software, you want to be with the winners. You don't want to be with the startup that dies in a year. So Dave, you're absolutely right. I think our view is, yes, maybe Anthropic, OpenAI, Google, yes, someone is going to be the 1, 2, or 3. I actually think all 3 will survive. But even if they don't, I think we don't have enough information now that the placing bets and trying to work with all of them is right, even if some of that becomes wasted work, just because we don't have full information.
I think you're right. All 3 will survive, despite Sam Altman's best efforts to kill his world.
Unfortunately, we're out of time on that story, which is a real shame because Art, I'd love to ask you your take on sort of whether we end up with agentic AI in 5 years' time and sort of and expense platforms sort of move into the background and the whole way finance teams manage money changes. But we're going to have to get you back for another podcast to dive into that. All right, let's move on to our final story. Actually, just before we do that, congratulations, Art, to you and your team on actually what's a fantastic initiative. I should have made more of it. It's super, super interesting. So well done to you and everyone who worked with you to get that built.
Thank you.
So our final story is that Latin American digital bank Ualá has raised $195 million in equity financing, led by the strategic investment arm of Germany's Allianz Group. So the Latin American fintech Ualá has raised new funding, valuing the company at $3.2 billion. The company now serves more than 11 million customers in Argentina, Colombia, Mexico, and has a full banking license in Argentina and in Mexico. Through a single mobile-first platform, Ualá offers a digital banking experience, including debit and credit cards, lending, investments, insurance, and merchant acquiring. The funding builds on its $366 million Series E round in 2024, which brought in Allianz as a strategic investor. The raise highlights continued investor confidence in Latin American fintech scale players, particularly those that have banking licenses and diversified product ecosystems. So this is an interesting story. Ualá has acquired its banking licenses in Mexico and Argentina rather than sort of earning them from the regulators. Veronica, we've seen other flavors of this sort of story elsewhere in Latin America and elsewhere. Is this the same sort of strategy that Revolut and others are taking of, start in one market in the continent, go to all the other markets? Do you think that's game's going to play out?
I don't think it's quite the same strategy. I mean, there's two pieces there. When you come to Latin America and deal with different jurisdictions at different size with different types of regulators, there will be some jurisdictions where it is easier to get properly into the market by acquiring a banking license versus going through the full regulatory process and channel. So there is that regulatory piece. But when we are also looking at Ualá in particular, partly in Argentina, and then also their expansion into Mexico, there's a financial inclusion piece that is going to allow them to passport that license to really offer their products to very large populations that are still financially excluded, but increasingly more financially savvy. So there is more of an inclusion piece there rather than just rapid expansion. I think they're being quite thoughtful with their regional expansion across LATAM.
What do we think of the partnership with Allianz, an insurance company, moving into or backing a digital bank? I mean, Dave, we haven't seen dozens of examples of sort of big insurance companies really supporting digital banks. There's a few elsewhere in Europe. Do we think, is Allianz just looking at this, do you think, as an investment and saying, hey, well, this is an interesting company, this is a growth opportunity for our equity portfolios? Or do you think they're also thinking in terms of the opportunity of distributing insurance to precisely these groups that Veronica was just talking about?
I think it'll be a mix of both. The big, Allianz and the other big insurers are massive investors across the globe. They have so much money in their portfolios that they can invest massively, and so this is probably led on an investment play, but actually has an angle of expansion into markets of selling insurance products and being able to work closely with Ualá on that and do upsell and cross-sell in there. But I think it's probably more an investment play from my perspective.
Art, what do you think of this story? I should know whether Brex operates in Latin America, and I don't off the top of my head, but what was your take on this story?
Yeah, so my take was, so we have Brex serves global businesses, but not LATAM only companies. So it's not a huge part of our revenue today. My take here was it's really interesting that Allianz led the round. And so I actually did think it was an embedded insurance distribution play where, Allianz's stated goal is to ensure protection into the financial lives of millions of people. And I kind of saw this as, hey, this is a pipe into distributing their product over time. Anytime you see a strategic lead rounds, I'm always wary of whether it's fully for financial reasons or if there's a strategic rationale as well. And so that was kind of my take. We haven't seen that yet. I haven't seen any discussion of a product or anything, but that was kind of where my head went.
And of course, those are huge markets, Mexico, Argentina, Colombia, big markets, millions of people in all of those countries. Veronica, I've been playing a bit of a game with myself to see how far into this conversation we could get without mentioning Nubank. Nubank is obviously such a successful digital bank, already operating in multiple Latin American countries. Is there room for Ualá and other players in that market? I mean, we were talking earlier about Revolut versus Starling and Monzo in the UK, and Revolut versus all the other different European banks, digital banks in other countries. Is Ualá always going to be playing second fiddle to Nubank, do you think?
That is a question you should probably ask a lot of Argentine people, because we're reviving the old Brazil-Argentina rivalry that goes far outside of football, honestly. I don't think I'm qualified to answer that question. But what I can tell you is, across LATAM, we still have a massive underbanked population. So even when you look at Mexico, it's kind of a fintech goldmine because over 50% of the population are still unbanked or underbanked. It's a massive market with a large informal economy as well. So Ualá certainly has a lot of opportunities to move into a new market and expand. There's a lot of room to grow. I think the partnership also with Allianz is a great vote of confidence into LATAM as a growth area. If you look at the continent as a whole, there's so many opportunities for continued maturation. But I really think we're going to have to let this one play out.
I think you're right. I think there's a huge amount to play for. I was just being a bit cheeky. Okay. Well, on that note, we will take a quick pause here, and we will be back very shortly.
As a chef, I know flavor doesn't begin in the kitchen. It begins on the land. And Westhome's nature-led Australian Wagyu is a story written in the landscape of Northern Australia. Cooking is storytelling, and Westhome Wagyu carries a story of Northern Australia itself. Raw, powerful, and deeply authentic. It's a testament to the passion and care raised in the rhythm of Northern Australia. I'm Chef Maylin from 88 Club in Los Angeles, and I invite you to visit westhome.com/Maylin to learn more. And taste a story only Westhome nature-led Australian Wagyu can tell. That's westhome.com/MEILIN.
Okay, and now for a quick look at a story we don't have time to cover in full, which is that Tide has become the first business banking provider to launch mobile phone plans globally, powered by gigs. So the UK SME fintech Tide has launched a new feature that takes embedded services beyond finance. In partnership with embedded connectivity platform Gigs, Tide has introduced the Tide Business Phone Number, a fully integrated mobile service inside its app. The service gives small business owners a dedicated UK business phone number that can run alongside their personal number on the same device, using eSIM technology. It's designed to solve a common challenge for founders and sole traders, separating personal and professional communications without needing a second phone, contract, or telecom provider. To find out more about this, we spoke to Heather Cobb, UK Managing Director at Tide.
Hi, thank you so much for having me on Fintech Insider. It's great to be on the show today. I'm Heather Cobb, the UK Managing Director at Tide, which is the business management platform used by nearly 800,000 small businesses across the UK. And today, we've announced the launch of Tide Business Phone Number, which is the first time a business banking provider has integrated a full mobile plan with a UK phone number directly into its platform. And this idea came from something we hear from founders all the time, that running a business often means juggling personal phones, contracts, suppliers alongside everything else. And that can really blur the line between work and personal life and make day-to-day admin more complicated than it needs to be. Plus, it means you don't know which calls to leave for voicemail if you're away on holiday. So what we've done is build a really simple solution directly into the Tide app, so that in minutes, members can set up dedicated business phone number through eSIM on their existing device. They can switch easily between personal and business calls, and they can manage everything in one place. We're launching this in partnership with Gigs, starting with a business number offering unlimited calls and texts to our plan members, with an optional unlimited data plan at market-leading pricing, all powered by Vodafone's 5G network. Ultimately, this is about removing another piece of friction from running a business and giving founders a simple way to keep their work and personal lives separate.
And finally, a fun story we picked up on this week, which is that Marks & Spencer has named GIllian Anderson as their Chief Compliments Officer. So for those of you listening from outside the UK, Marks & Spencer, or M&S, is a major food, clothing and home retailer. This new role has been created as part of its latest campaign called Love That, designed to celebrate the power of small affirmations. And for those of you who don't watch TV or video, GIllian Anderson is an actor best known for her role in The X-Files, Sex Education, and The Crown. According to the retailer, 62% of people say that receiving a compliment makes them feel happier. So Anderson's job is essentially to champion positivity and encourage people to compliment each other more. Which got us thinking, the worlds of tech, fintech, and marketing have produced some pretty unusual job titles over the years. So I'm going to invite my charming, good-looking, highly intelligent panel to tell me what some of the strangest job titles they've come across in fintech or tech are. Who's come across a wacky title in tech or fintech?
I'll go first. I wouldn't say it's quite a job title, but I did once know someone who used to bring their dog into the office and dubbed them the Chief Happiness Officer. And I think an office dog is always going to win for office positivity.
I love that. Do you have any wacky titles at Brex or any sort of morale boosting roles?
I'm trying to think.
I came across someone who'd given herself the title of Chief Marketing Fairy at a fintech a few years back, which I thought was quite fun.
Yeah, I think one thing that's taking off is this storytelling role, like chief storyteller. I'm not sure if you guys have seen this phenomenon on I've seen it mostly on X, but essentially the idea is like, in an AI world, brand is so important. And so there's these like storyteller roles. The irony is that my personal view is the founder, the management team needs to be telling the story. You can't just hire some person over there who's going to tell the story of the company. So that's the one that I find funny, but not because it's humorous, because I think it's just not smart.
I suppose if you get that person to help you tell stories better, then it works. So if the role of the chief storyteller is to help the founders tell better stories, then perhaps that's.
But then they should be the chief storyteller teacher, enabler, or chief storyteller. They're not the storyteller, right? And that's the title. So,
Dave, do you have any wacky titles or any any complementary roles?
Not really. I've spent too much of my time in big banks, which have weird titles anyway. But I think certainly having worked all of my career in technology, I think we're very poor at complimenting people in general, and particularly the poor old infrastructure guys who never get compliments because if their world is working, nobody notices, and they only care if it goes wrong. So, I think it's always good to sort of give a slap on the back and compliments to people like the infrastructure and platform people in the world, which I think they get very little thanks for what they do in technology.
Indeed, we all do tend to take it for granted when it just works, and there's a ton of work that goes into making it just work and making it just easy and cheap and fast. Well, on that note, then, I should thank my delightful, charming panelists for your insightful and intelligent commentary and illuminating these subjects. And I should also compliment our listeners for being so smart and for always prompting us to cover great stories. So thank you so much to the three of you. Where can people find out a little bit more about you and your companies? Veronica, where can people find out a little bit more about you and about Juice?
You can find me at Veronica Maria Glab on LinkedIn or getmejuice.com.
And Art, where can people find out a little bit more about you and about Brex?
Yeah, Brex.com, and I'm Arthur at Brex.com.
And Dave, where can people find out more about you and FoundryOS?
Yeah, you can find out more about me as Dave Morris on LinkedIn and more about Foundry at foundry-os.com.
And as for me, Benjamin Ensor, you can find me on LinkedIn or you can find out what the team are up to on 11fs.com. So that wraps up today's episode. Thank you all so much for listening to today's show. Please do follow us on your favorite podcast platform of choice. And if you really like what you've heard, please do share the podcast with a colleague. If you want to join the conversation, seek us out on social media. Just search for 11FS or Fintech Insider, or you can email us at podcasts@11fs.com. Thank you all so much again, and goodbye.